Hello, this is Renee Hahn with William Ravis Real Estate coming to you from sunny Naples, Florida. My thoughts and prayers go out to all of you who might be sitting in ice storms right now. It does not look fun. And I'm sorry to rub it in that it is finally sunny, bright, and warm here in Florida. It's been a little bit colder the last couple of weeks. So wishing you well as you make your way through the next 24 hours to make it through the ice storm. If you happen to be in places like Texas and others, Mississippi, some of the states that aren't equipped to deal with those kind of storms. But if you need to get away, it's a perfect time to be here in Naples, Florida this time of year, my favorite time of year. We're going to talk about, as part of this monthly market update, December of 2022, because as you'll recall, and I pointed out with every market update, we're always looking at a month in arrears. And we do that because we need that time to be able to make sure that all the numbers come in so that when Naples Area Board of Realtors reports on it, we've accounted for every closing, we've accounted for every new listing. And so there will always be a 1 month lag, if you will. So I want to start with some overarching comments, and then we'll get into the specific metrics that we always look at. So let's start with a little bit of a look back, a reflection, if you will. Looking back, the last several years have been anything but normal in Naples real estate. So you start with coming off a rebound from the Hurricane Irma, and we found ourselves in the COVID-19 frenzy, which lasted for nearly 2 years. It's hard to believe that, but nearly 2 years. That had immeasurable impact on real estate market, and it candidly helped propel home values to a whole new level. And I won't revisit that because we've talked about that many times during the course of that 2 years and what was driving that. So just looking forward, in 2022, as pandemic restrictions started to loosen, sellers and buyers pivoted attention from the housing market, and whether that was purchasing or selling, to the travel market, because candidly, it was the first time that many people could certainly go internationally. So we saw a real slowdown coming out of the season of traffic, both of traffic on foot or virtually for looking at homes to purchase, but also homeowners that might have been thinking about selling may have hit the pause button to go catch up on their international traffic. So it created slower buyer traffic in our area and continued to contribute to the low inventory. Of course, in 2022, we also had Hurricane Ian visit our coast and impact a good number of coastal homes, creating some new dynamics in the market. You saw a lot of lot value homes that became available in highly desirable luxury communities close to the Gulf, something that had not taken place in a long time. You had displaced homeowners that were out and added to the buyer pool as they were on the hunt for new homes to live in. You have insurance costs starting to skyrocket, among many other notable consequences, all things that played into how this market is behaving now and moving forward. The rising interest rates are also keeping some homeowners in place. So if they locked in on a home they bought 5 years ago at a really low interest rate, the thought of giving up that interest rate, going and finding a new home and having to pay more, not only because home values have gone up, but because the cost of securing a loan with interest rates has also gone up. So you've got that factor going on. You've also got, in some cases, that is limiting inventory because those people are not wanting to sell their homes. And then on the flip side, when you look at beach condos, those owners are now facing into higher cost. They're potentially looking at some sizable assessments. They've got rising insurance cost. And so those sellers may be at a point where they're actually considering selling now when they otherwise may not have. So shifting a little bit in the marketplace. All the while, the Naples market has continued to fare well, though. Despite rising inflation and interest rates, home prices have stayed pretty stable. But one thing to factor into this is when you do look at the rising interest rates, insurance cost, assessments, taxes, because taxes are higher if home values are higher, the cost of buying a home today in Naples is a lifestyle that many may not necessarily be able to afford. And this I saw a big impact on, because if I started with a buyer pool 2 years ago, that buyer pool now may not be able to afford the same thing that they could afford before, or may be priced out of the market altogether. So there is a portion of the buyer pool that has pulled back from property purchases and pursuits in the Naples area, simply because affordability may be an issue. So as we dive into the metrics, I want to start with inventory. If you look at inventory in November of 2022, it was up 97% year over year, and it was sitting at about 2,478. For December, it was pretty close to that. It was 2,465 homes available on the market for purchase, but it was a 106% year over year increase. When you look back to December of 2019, the median price for a home was $344,255. Inventory was double what it was today. The number of single-family homes in inventory has decreased by 54 homes between November and December of 2022, while condominiums rose by that same number, 44 homes, during the same time frame. So you've got some shifts in the inventory in terms of where availability is on the rise and where it may be decreasing. Now let's look at new listings that were hitting the market. In November, you had 765 new listings hit the market. That's not right. You had 926 new listings hit the market, and that was a 6% decrease year over year. In December, we were at 765 new properties that were, and they were listed at a 12% drop year over year. So you can see here, inventory is still running low compared to the prior year. The other thing that's running lower is new home builds. They've been slowing down since many builders are busy with hurricane renovations. They've had to redeploy their workforce to go back and fix things on homes that were either under construction or newly built, while new home builds slumped in December. According to the report that Naples Area Board of Realtors produces, new construction sales consumed 16.7% of all closed sales in December, up slightly compared to the last 2 months. So there's been a shift. I can remember not that long ago with new builds, many of the builders were doing lotteries. They had limited inventory they're releasing every month, and you had to sit on a web meeting on a Friday and put your name in the hat for a house that you may or may not get. That shifted. Every builder's now returned to more business as usual, where you go in, you pick your lot out, you pick your floor plan, and you enter into a builder's agreement that way. So definitely you've seen, again, a shift in that new development and the availability of new things starting temporarily while they catch up with post-hurricane work. But the new build continues to be a vibrant piece of our market. Now let's take a look at what was going under contract. So pending sales was at a total of 767 in November, and that was a 33% decrease year over year. If we look at December, it was lower than that 767. We were sitting at 682 pending sales, and that was a 34% decrease year over year. So inventory is going down, but also the number of homes going under contract has gone down as well. Pushing forward to closed sales. So you've got what's going under contract. Now let's take a look at things that are a little further in the pipeline with closed sales. In November of 2022, we had 552 closings. That represented a 41% year over year drop. If you fast forward to December, the number of closings was 626 closings during the month, and that represented a 42% year over year decrease. As you can imagine, with the market shifts, you're going to start to see more and more shifts in the days on market. And this is where it's interesting, because in normal times, if you had low inventory, you would probably expect to see a continuation of what we saw late last year with leapfrogging, right? Because if you don't have many houses to choose from, you could have more competition for those houses. But we're actually experiencing a slightly different effect, because as we've talked about, buyer traffic has slowed down for a variety of reasons that we've talked about. It could be affordability. It could be reprioritizing other things. It could be that the market and inflation has caused people to pause on making any discretionary investment decisions. It could be the fact that there is low inventory and buyers aren't seeing what they want, and therefore they're not making offers. But all of that to say, you've got low inventory, but low buyer pool, and it's causing homes to be on market a little bit longer. So I talked already about the fact that for the most part, the prices of homes is staying pretty stable. Now, I could show you examples all day long that will differ from that, because the one thing to keep in mind is Naples is a very segmented market. I have listings all over town. I've got some that the minute they hit the market, I'm still getting multiple bids on. I have others that are taking longer to sell, depending on the community and depending on the demand for that particular type of home and area. But the one thing, despite the fact that for the most part at a high level, pricing is staying stable, it's taking longer to sell those. So we went from, look back to June, the days on market was sitting at 18. Now we're at 49. And again, I can show you plenty of examples. I've got a community down in Southeast Naples that I have a listing right now, a very popular community, but the higher end homes are sitting on the market sometimes over 100 days, sometimes over 200 days, more often than not. So yes, the average is 49 days. We have some selling much quicker than that, as I already mentioned, and in some cases longer. But on an overall trend, you're going to see things taking a little bit longer to sell. Now let's take a look at median closed price. And I've actually got an extra slide in here that I'll flip to after this. But look at November. The median closed price was $600,000. In December, it was $575,000. That was a 14% increase year over year. And the last quarter of the year, there were 1,985 price drops. Last quarter of the year. 900, that compares to 918 price drops in the first quarter of the year. Now, there are many of those that are price drops because as the market started to reset after the leapfrog frenzy, there were a couple stragglers hanging on, wanting to get those crazy premium prices, and they were getting batted down a little bit. But it's also a consequence of things taking a little bit longer to sell. So we have some anxious agents, we have some anxious sellers that when they're used to seeing things fly off those shelves in 1, 2, 3 weeks, sometimes days, now you're on the market a month. A lot of sellers are kind of running to price reductions. Again, some of that is self-inflicted, not something that I think you're going to see an erosion of overall values in the Naples market, but certainly a symptom of nervousness on the part of some agents and some sellers. The report from the Naples Board of Realtors showed that only 105 homes for sale below $300,000 in December. 105 homes that were priced $300,000 or less. When you compare that to 2019 in the month of December, there were 1,816 homes that were for sale below $300,000. So you've also got a little bit of a market shift going on in terms of availability of lower priced homes. That has a lot of different consequences. One, it naturally shifts your median close price up because you don't have the bell curve, if you will, balanced out at the lower levels. It also, as I already said, means that there are some people that could have afforded to purchase property in Naples that are now priced out. So definitely something to keep in mind. I wanted to throw this in because this shows you for this year what the list price was compared to what the sale price was. You can see at the beginning of the year, we started out really strong. We were sitting at offers that were closing and sales that were closing right about at the list price. But if you look at what's happened since the month of June, that's starting to taper off. Now, during a transition period, it's always interesting because some sellers haven't seen this chart and they haven't gotten the memo and they're still holding out for that perfect 100% offer or something close to it. While others are more reasonable, they understand they're not going to get multiple bids. They appreciate where buyers are coming in. Excuse me. And you can see it's accounting for a little bit lower percentage of list price in the ultimate purchase. So hopefully this is helpful. What I would sum it up is where I started, and this is the overall theme. There are always going to be speed bumps in any given year, in any given quarter. If you got nothing from looking at the last 24 months, you need to know that things can shift very quick. Prices skyrocketing was a very quick pivot. Prices coming back down was a quick pivot. Inventory going up and down at different times of the year when it spiked were quick pivots. So you've got to be connected with a good, experienced, and knowledgeable agent that can guide you through how the market is behaving. It's interesting because I am highly analytical and I think I have a good pulse on the market because I work across town. I work across price points. I work with a variety of not just sellers, but buyers. And so it gives me some broad, good, deep perspective. And I myself find times when I am trying to show data to support and educate the buyer or the seller and show them what the data is saying so that they make good informed decisions. And at times people still want to do what they want to do. It's the times that I actually hate being right. Whether it's pricing counsel I've given and then a home sits longer. And, that's the worst thing you can do, because if I showed you a graph, you will never have as much interest and traffic on your home in that first couple of days, even if you go through a price drop later. So it just makes it so important to work with an educated, experienced agent that's going to use data to help you make decisions, and then accepting that guidance and trusting in it so that you don't find yourself in a situation where you're overpaying for a home, where you're leaving money on the table, where you're overpricing a home and can never recoup that interest in traffic to the point that it dwindles. Those are all things that, through the right relationships and guidance and data, you can hopefully avoid. So if I can ever be assistance to you in that light, don't hesitate to reach out. Again, Renee Hahn, William Ravis Real Estate. You can reach me at 239-287-2576. Or go to my website, www.yournaplesexpert.com. Have a fabulous February. It's a great month. You've got the Super Bowl in 2 weeks from now, I think. You've got Valentine's Day coming up. Even if you think it's a Hallmark holiday, it's still a great time to express your love for others. And we've got some fun, exciting things going on down here in Naples. So come check us out and have a wonderful week.